Hello and welcome to the latest episode of On the Money, a weekly bite-sized show that aims to help you get the most out of your savings and investments. In this episode, I'm speaking to an investor that specialises in technology shares, and that investor is Mike Seidenberg, who manages the Allianz Technology Trust. I asked Mike how he approached the uptick in volatility for technology shares so far in 2025 as tariff uncertainty spooked the sector and the wider US market. We also asked Mike to look ahead and give his outlook for the sector. Mike is based in San Francisco, so just to flag that this was a remote interview and the interview took place last week in mid-May. So let's get to it. So Mike, we've seen so far in 2025, it has been a trickier hunting ground investing in technology shares. Uncertainty regarding US President Donald Trump's trade policy caused a pickup in stock market volatility from around mid-February to early on in April. What were your views on the sell-off? Was it justified, overblown, or somewhere in the middle?
Sure. It's a good question. I mean, to say it's been a volatile year, is a real understatement. Tech started off strong. The beginning of the year, and then obviously you had, a fairly dramatic drawdown, due to the discussion around tariffs, and what that might mean, to companies. Look, as we sit here today, it appears that, the initial tariff discussions were one, just that, right? In order to get get countries in order to, to the table to renegotiate tariffs. And I mean, that appears to be the direction we're going. Who knows kind of, how it plays out. I think the one thing we've done as a team is to make sure that if we're going to make a decision, we do it wisely and not be reactionary. And that's something that I think we practice quite a lot. We're very disciplined around that. So I think that we're gonna maintain our discipline, and we're gonna continue to look for unique opportunities, companies solving difficult problems, et cetera, et cetera. So, that's kind of how I feel. I mean, it's definitely been something where it has introduced just a lot of volatility, with respect to just, kind of the day-to-day stress of the job is what I'd say.
And how much of a factor alongside tariff uncertainty were valuations to blame for the sell-off? Of course, in both 2023 and 2024, they were both very strong years for the technology sector. And as a result of that, the valuations did become richer.
Yeah. I mean, I didn't look at stocks, at the end of 2024 and say, oh my goodness, these are really expensive. I think in certain sectors you had higher valuations. But I think on average, remember we've digested a lot of product post the pandemic. So it's, technologies, good years in 2023 and 2024. But I went into 2025 thinking about a real rifled approach, which is, why at the margin you can see the trust runs fewer positions. They tend to be bigger. They tend to be more focused on, kind of more secular ideas. But I entered 2025 thinking that, in some of the sectors we cover that we had a chance for really good appreciation. Here again, we saw a drawdown, we've seen a recovery. We've seen companies report, Q1s that on average are pretty good quarters,
And we've seen over the past month or so, US stock markets have been making a recovery. It all started when Donald Trump pressed the pause button on delaying tariffs for most countries, a 90-day pause. And then since then, we've also had the US and China strike a trade deal as well. Do you think this uncertainty over tariffs, it's now over, or could there be more short-term pain to come?
I mean, with the current administration, it's probably the latter, not the former, right? I mean, could there? Absolutely. I mean, the unpredictability is very difficult to predict by definition. And we've seen stuff that I don't think any investors thought we'd see, from the current administration. Having said that, our job is to build a portfolio that can perform in a variety of macro conditions. And that's the task at hand. So, I could wring my hair out and be like, oh, woe is me, unless I plan on, passing the baton to somebody else. Our job is to invest in technology companies that solve difficult problems, that are going to execute, in a variety of macros. And therefore, what you see with the trust traditionally is you see tilts, right? In a more bullish, economy, you would probably see us tilt more to the higher growth names. In a more challenging economy, we'll probably have more kind of GARPy value stocks. But ultimately, it's building the portfolio from a bottoms up perspective with a macro overview. And that's our job.
And in terms of portfolio activity, I spotted that you've recently introduced two new Chinese companies, Alibaba and Tencent. Could you talk us through that decision? I saw that you said that it was to give the portfolio more diversification.
Yeah, I mean, look, not surprisingly, we're looking outside the United States. It's not just limited to those two for opportunities in technology, given what we've seen from the tariffs, or the proposed tariffs is the correct statement. But, I do think at the margin, all things being equal, there's going to be some backlash, potential backlash against U.S. companies, given kind of the policy decisions that are being proposed. That doesn't mean that that's the final kind of outcome. So, we have looked outside the U.S. I think in the case of the Chinese companies that you referenced, Alibaba and Tencent, those were bought for very specific reasons. I mean, really driven around AI solutions and really feeling that they had some differentiated product, that we were protected from a governance perspective, given kind of where they are in the pecking order of the Chinese tech companies. They're at the very top. I think, I've been pretty clear that the administration in China is something that is fairly uncomfortable for the team. But we thought that the benefits outweighed the risk with respect to some of these AI solutions that we're seeing out of the likes of Alibaba and Tencent.
And did you make many other changes during the sell-off? I know that you have a lot of exposure to the Magnificent Seven stocks. I think the only one you don't own in your top 10 holdings is Tesla. I don't think you have that at all. Have you maintained positions for those six stocks?
We've probably varied the positions a little, not a lot. Look, I think it's also important, despite the fact that we are using a fair amount of capital in the Magnificent Seven, it's just a reminder to the listeners that, we are underweight relative to the benchmark, which is kind of why, I'm proud of the team's ability to keep up despite not owning, benchmark weights in these stocks, which have just been, on the tear of the past few years. I think like most portfolio managers, we have varying degrees of, things we're more excited about within that group and things we're less excited about. But for the most part, we haven't made major changes. I mean, we've been underweight NVIDIA from a benchmark perspective. We remain underweight. I think it's a great company. I think that, our thesis had nothing to do with tariffs, had to do with, kind of late last or kind of summer of last year, just kind of looking at product transition and, which can be tricky for companies as they introduce new products, from a production perspective. But, on average, and I've said this for a long time, the Mag 7 are just, they're really good companies. Our job is to find performance elsewhere at the margin. And we really try to charter ourselves on trying to do that.
And in percentage terms, what is the current underweight for the investment trust versus those seven stocks?
I mean, I don't have the exact number off the top of my head. On average, we are materially underweight the Magnificent Seven because they are such a chunky chunky portion of our benchmark. So in some cases, we could be at 50% of the benchmark. I wouldn't want to throw out a number unless I had the exact number.
You've touched on the artificial intelligence trend. Could you outline how big a theme it is in the portfolio and what your latest thinking is? And it'd be great to hear some sectors and other companies mentioned that you invest in for that theme.
Sure. Yeah, I mean, there isn't a company that investors interact with today that aren't, that aren't looking at artificial intelligence as a way to make their business better. I mean, I think it's from, from McDonald's to Microsoft, right? Everybody's trying to figure out how to use artificial intelligence to make their, either to, sell more things, better customer service, take out costs, you name it, right? I think when I think about the trust and kind of how we're positioned today with respect to AI, I think we're really kind of looking at the enablement side. As companies use the technology to make their products better. I'd say previously, we'd had, pretty chunky position sizes in the picks and shovels side of the business. Those are a little bit smaller today and probably trying to play it through a variety of other sectors, right? If you take a look at the likes of, some of the ad companies, right? Whether it's, Google or whether it's Meta, they're really using artificial intelligence to make not only their tools better for their customers, but also the experience better for us, the consumer. If you take a look at some of the security companies, cybersecurity companies, which is a large theme for the trust, you're seeing artificial intelligence make the users of cybersecurity products more efficient, right? And that's a huge pain point. I mean, I was just at RSA, which is the large security event, a few weeks ago in San Francisco, and the one message you get that you hear consistently at that trade show is we need people, right? We have too many open job recs, we have too many false positives, and by the way, the adversaries are getting better and better, right? That is not the equation that you want to hear. But then you hear about, like, you go talk to some of our holdings, which we did, and you hear about them using artificial intelligence to make their products better. That's a win. So I think those are the types of things we're looking for. I think that, here again, I don't think there's any kind of, call it Fortune 2000 company that isn't considering what it means to her or his business. But we'll continue to look for enablers. We'll continue to look for companies that we think, are potentially on the picks and shovel side, of the business. This is a really important movement in technology. And, you get stuff like this kind of, call it once every 10 to 12 years. So when it happens, it's powerful. And you saw that, right? You saw that with the results of the hyperscalers who basically said, we're continuing to invest in, our artificial intelligence solutions and build out data centers because we see demand for the services, right? So, that's a pretty big vote of confidence, in my opinion.
And a key part of your focus is to identify market leaders. I've seen you say in the past that technology companies that are market leaders who execute well are likely to be rewarded. Could you talk us through then how you find those potential winners?
Sure, Kyle. We operate under a mosaic, right? So, we're really chartered with going out and doing a lot of listening. And you listen to customers and you listen to chief information officers and you listen to system integrators. You talk to engineers that are building chips and who's winning bill of materials. And from that kind of points you in a direction, whether that's a subsector level or, it tends to be point us in a subsector level direction. We then kind of drill down and look at that subsector, look at the competitive landscape, look at the gross profit dollars available, and then figure out, is it interesting? Because, not every sector, there's a lot of profitless prosperity, and that's not something that I'm that interested in as an investor. But then we kind of drill down to figure out kind of who the number ones and number twos are in a given subsector. And that really boils down to this kind of, notion that, the good ideas are a dime a dozen, but execution is rare. So when you find companies that execute, you really want to kind of, tie your paddle to the, to that canoe, so to speak. That's something that, it's a process. It requires patience. Arguably, sometimes we're not patient enough. But I think the idea is, to be able to be on board for that trajectory of execution. Doesn't mean it won't have its hiccups along the way, and then just, hopefully get rewarded for it. And we have seen traditionally in technology that the number ones and twos take disproportional share. Look, a lot of these companies are fighting for intellectual capital, right? Those are the widgets in a lot of these businesses. And therefore, leadership, culture, how companies deal with problems, that becomes really important stuff to understand, the companies that we need to invest in. And I'd like to think that we're constantly working on our process. I mean, as the portfolio manager, I can't tell you how much I love going to meet with companies. I just, it just makes me excited. And, I was at RSA, as I mentioned a couple of weeks ago, and just being on the trade floor, being on the show floor, all these customers are there. They're, talking to them, understanding kind of what their problems are, what tools and technologies they're using to solve it. And I have, I'm fortunate. I have a team of people that have that same passion, that go out and do it in other sectors. And then we work accordingly to figure out the best portfolio for our investors, hopefully.
And could you highlight a couple of examples of the market leaders that you own in the cybersecurity sector, which, as you mentioned, is the number one theme for the investment trust at the moment?
It's one of the themes. I wouldn't say it's the number one theme. I mean, we have a variety of themes. If I take a look at kind of a company like CyberArk, right, where we've owned it for multiple years, they started in kind of what I call server identity that led them to the cloud. As the cloud proliferated, they started thinking about other types of identity, whether that's machine identity, and then they did an acquisition of a company that had been starved for cash, which has really proven to be is thus far a successful acquisition, which, by the way, normally isn't the case in a lot of companies. Look, I think it really boils back to their initial area of focus, which was solving this pain around getting privileged access to things like servers and routers and things that are just so important in today's world. And then they've just branched off, and they've been able to do that in a virtual environment. And now we're living in this age of, agents and machines, and, then they're moving into that. So, I think, it's a company that we've known them since they went public. This is the second CEO. The founder was the first one who we really liked, like the current one, new CFO who we've known. So I'd say it's been a journey of just being patient. It's been a journey of really understanding why they do better versus their competition. We've had, like most funds, we've had varying position sizes depending on valuation and kind of the overall situation. But, I think it's a good example of just a company where we've been able to identify it and had a really differentiated view, and things just, more good things happen, came along with that, which just allowed us to kind of rethink the opportunity as time went on.
You've mentioned the importance of being patient a couple of times, which I think investors should also have at the forefront of their minds when there are heightened periods of short-term volatility. And in particular, with technology, it's very important to take the long-term view. So could you provide an outlook for the technology sector on a longer-term view, say over the next 5 years?
Yeah, I mean, so listen, if I really, I don't have a crystal ball, but I can tell you this, and I do think it's important to be patient, and I think it's really important for our investors and the ones that have been impatient. I think that they feel good about their patience and what we've delivered to them over time. If you think about areas of leadership for countries like the UK and the United States, and many of these first world countries, it really boils down to a few industries, of which technology is one of them. And the problems that technology solves on average are pretty difficult things, right? And when you solve a difficult problem, or there's a lot of pain, I always say this, people will pay you for that. And if you do a really good job, they'll want to buy something else from you. They'll want to buy a second product. And I often talk to the younger companies that we invest in about making sure that, happy customers want to buy more. And I believe that, and I've lived that when I worked in industry. So I think for us and for the group, so at the highest level, I don't think the technology story is even at all over, right? This has been, I've been working in technology. I worked at Oracle, starting in 1997. And, I can remember people saying, oh, client server, it's over. There's been lots of it's overs. And the reality is technology is becoming an increasingly important part of the economy. And we're living in a very digital world. And so that's people probably aren't going back, right? I never hear anyone say, by the way, I'm getting rid of my iPhone. I really dislike it. There are aspects of it people dislike. Like I dislike the fact that I'm always available, which is why I put a do not disturb sign on my phone when I go to bed, electronically, I might add. But look, technology is the fabric of our lives. And that'll continue to be the case. By the way, it's not the only industry that, that I think is an interesting growth industry. I think, medical, pharma, amazing stuff happening there, using lots of technology in that solution. So, sure, it's going to ebb and flow, and there are going to be times where it's more in favor, more out of favor. But I just go back to this kind of premise that, it continues to be an increasing part of creating a competitive advantage for companies, and therefore that probably persists. And it, here again, it's going to zig and zag, but the technology story isn't a year story. It isn't a decade story. It's a multi-decade story. And I'll be, skiing on the beach, and they'll still be talking about technology. It's just, when you have that type of innovation, that's just impressive. And it's not innovation for innovation's sake. And that's the other thing that I always remind myself.
Thank you to Mike, and thank you for listening to this episode of On the Money. If you enjoyed it, please follow the show in your podcast app and tell a friend about it. And if you get a chance, leave a review or a rating in your podcast app too. You can join the conversation, ask questions, and tell us what you'd like to talk about via email on otm@ii.co.uk. And in the meantime, you can find more information and practical pointers on how to get the most out of your investments on the Interactive Investor website at ii.co.uk. And I'll see you next week.